Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money madness. And today we're diving into Fortress Credit Realty Income Trust's latest filings, a report that's got some interesting moves happening under the hood. So what's the big story here? Well, Fortress Credit Realty Income Trust dropped a Form 8K on August 1st, revealing a pretty significant sale of common shares and some distribution details that shed light on how they're operating. Think of it as a peek behind the curtain to see where the money is flowing. We're looking at a report dated August 1, 2025, which tells us about some important events that just happened right around then. This is Fortress Credit Realty Income Trust, the company we're focusing on today. This is a current report, a kind of announcement for major events that shareholders need to know about right away. It looks like they're still operating as an emerging growth company. This means they're a younger company and get to follow some slightly different rules when reporting financials, which can sometimes make comparisons a bit tricky. Now let's get to the juicy part, item 302. This section is all about selling shares that didn't go through the usual public registration process. This often means they're selling to a select group of investors. And wow, did they sell a lot of shares, a massive 1,844,412 common shares were sold, bringing in about $37.3 million. This is a pretty substantial chunk of money. They sold different classes of shares, like Class B shares, a total of 438,743 of these went for $8,843 of these went for $48,000. Then there were Class J4 shares, 573,212 of them were sold for $11,623,200. They also sold Class S shares, 9526 to be exact, bringing in $1,835,000. And finally, Class A shares, 741,931 of these were sold for a hefty $15,033,000 in this. This kind of private sale is usually done to raise capital quickly and directly from investors who might be more sophisticated or have a specific interest in the company's direction. It's a way to get money quickly without the lengthy process of a public offering. Moving on to item 801, this section covers any other important events that don't fit neatly into the other categories. And here we see details about dividends or distributions. On July 31st, they declared distributions for all their different classes of common shares. This is essentially the company sharing its profits or income with its shareholders, a pretty standard practice for real estate investment trusts like this one. Let's look at the numbers here. The gross distribution is the total amount declared before any fees are taken out. For Class B shares, the gross distribution was $0.1428 per share. There's a shareholder servicing fee, which is a small cost to manage investor accounts, and a management fee. These are the costs of running the company and managing its assets. Sometimes there's a performance fee if the company hits certain targets, usually tied to profitability. The net distribution is what shareholders actually receive after all those fees are deducted. So for Class B shares, after all fees, there's a net distribution of $0.260 per share. Class R shares get a net distribution of $0.1119 per share. Class J1 shares will receive $0.1178 per share net. Class J2 shares are set to receive $0.1219 per share net. And Class J4 shares with a net distribution of $0.1056 per share. Class S shares get a net distribution of $0.1022 per share. Class I shares are looking at $0.1152 per share net. Interestingly, Class E shares receive the full gross distribution of $0.1428 per share, suggesting they might have different fee structures or no fees at all. These distributions are slated to be paid out around August 4th, either in cash or reinvested back into more shares for those in the company's dividend reinvestment plan. So what does this all mean? Well, the sale of shares shows they're actively managing their capital structure and raising funds, which can be good for growth or to cover expenses. The distribution details give us a snapshot of how income is being shared and how differently classes of shares are treated, which is quite common in investment trusts. They're essentially telling investors, here's a bit of what we earned and here's how much you're actually getting after we take our cuts. Now let's put on our Warren Buffett hat and think about the bigger picture. Fortress Credit Realty Income Trust is in real estate, which can be a stable income generator, but also sensitive to interest rates and economic cycles. The fact that they are selling shares private is a strategic move to bring in capital without the immediate scrutiny of the public market. The different classes of shares are interesting. They likely cater to different types of investors with varying needs or risk appetites. For example, Class E shares getting full gross distribution without deduction might represent a different investor profile, perhaps one that's more institutional or has a direct investment arrangement with the company. The net distributions per share give us a tangible idea of the income generated by the company's underlying assets relative to the number of shares outstanding. It's important to see how these net amounts hold up against previous periods or against competitors to gauge performance. The fees, shareholder, servicing management and performance fees are crucial. They eat into returns, so understanding their impact is key. For example, if the performance fees are kicking in, it means the company has likely achieved certain financial goals, which is a positive sign, but we need to see if those fees are justified by the overall returns for shareholders in the long run. We're seeing a company that is actively managing its capital structure by issuing shares and distributing income to its shareholders. This suggests a dynamic operation, but also highlights the importance of understanding the fee structures and the specific terms associated with each class of shares. The key for investors is to look beyond the headlines and understand the mechanics of how Fortress Credit Realty Income Trust operates its asset management and how effectively it translates those into net returns for the different investor classes. Looking at the information provided, the company is actively engaged in raising capital through unregistered sales, which is a common strategy for firms like this to secure funding without going through lengthy public offerings. It shows a proactive approach to capital management. The distributions declared indicate a regular flow of income to shareholders, which is a positive sign for an income trust. However, the differences in net distributions across various share classes highlight the importance of understanding the specific terms and fees associated with each class. For instance, the Class E shares receiving the full gross distribution without any deductions suggests a unique agreement or potentially a founder's class or a specific institutional investor agreement. The other classes with deducted fees show the operational costs of managing the trust. Honestly, the disclosure of these specific share classes and their respective distributions is where the real value lies for a discerning investor. Trying to understand the underlying assets and how they generate income is critical, but seeing how that income is divided and what costs are associated with each class provides a much clearer picture of the company's operational efficiency and its commitment to different investor groups. The fact that this is an emerging growth company means that while they might offer greater growth potential, they also might carry higher risks compared to more established companies. This filing suggests a company in a growth or expansion phase, necessitating capital infusion and clear communication about payouts, a much clearer picture of the company's operational efficiency and its commitment to different investor groups. The fact that this is an emerging growth company means that while they might offer greater growth potential, they also might carry higher risks compared to more established companies. This filing is a good reminder that in the world of finance, it's not just about how much money a company makes, but also how that money is managed, distributed, and how much it costs to do so. Fortress Credit Realty Income Trust is clearly navigating these waters, actively raising funds and sharing its income stream with investors. It's a complex but vital part of their financial story. Alright, that's our breakdown of Fortress Credit Realty Income Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.